general idea of when you guys might be looking to buy. So scroll through the chat here. Got a couple of people just looking, just interested. 3 to 6 months, 3 to 6 months, 6+ months active. Got a couple of people active. Okay, so all across the board, which is perfect. Like I mentioned um, in my promos, not sure if you saw my advertising for the seminar. This is for everyone. Whether you're looking to buy right now, you're actively looking, whether you're looking to buy in 3 months, 6 months, 2 years, or you're just curious, you are welcome here, and we are happy that you are here. So for tonight, the overview, our agenda, these are the 8 keys to buying a home, and we're going to talk about each of these in depth. So research, loan pre-approval, assemble your team, tour properties, write winning offers, escrow, close of escrow, and take possession. So we're going to follow just each key and use it as our agenda. Before we jump into that, we'll talk about the market a little bit, and then at the very end, we'll take some questions. So we'll go from there. If you want, as we go, feel free to throw questions in the chat. If I see them and if I want to get to them, I'll answer them in the flow of things. If not, I'll hold them until the end, but we'll definitely get to them. So feel free to throw the questions in there as you go, as you think of them. We can also open up to the floor as well at the end. So a little bit about me to start. My name is Ronnie Jenkins. I'm a real estate agent. I serve Orange County and Silicon Valley in California, just in case there's someone who is not in California here. I started 13 years ago, been in the business for 13 years. I built my business up in Silicon Valley, and for the last 2 years I've expanded down to Orange County, and now I'm serving both Orange County and Silicon Valley. The world has definitely got a lot smaller these days, and my strategies for helping buyers and sellers work in both markets, and it's been great so far. I'm able to access both markets, service my clients that I've had for over a decade in Silicon Valley, and meet new clients in Orange County. I live in Orange County. That's where my family is. We live in Ladera Ranch. If you're curious where we live, I've got 4 kids, and Ladera Ranch is one of the greatest places to live if you've got kids. If you know, you know. But we definitely have family still up in the Bay Area and the Silicon Valley, and I'm up there often. Usually once or twice a month I'm up there as well. So definitely got a foot in both worlds, and it's been fun. I've sold over 100 million in my 13 years on my own. I've been on some teams, I've worked on my own, but that I can credit to myself, over 100 million. I work with buyers, sellers, and investors. So if you or anyone you know is looking to invest in real estate, I definitely have a lot of knowledge in that area as well. I worked with a number of investors, and I do some seminars and investing clubs and stuff like that too. So if that's ever something you're interested in, stay tuned for that. Feel free to ask me about that. I can get you connected with that too. And then my focus is people. I'm in the real estate business, a sales business, but for me, it's a service type of business. I always approach it from service and look to build relationships with people and look to educate people on both sides of the transaction. And when you're looking to buy a house, when you're trying to sell your house, and once you're in escrow as well, and you've got 2 parties involved, as a real estate agent, my job is really just to guide my clients through the transaction, guide them through the process, to be there and to be a wealth of knowledge and to educate people on the process. And that's why we're here tonight. We're here for education, to educate you on the home buying process. And have I said I'm happy to hear? Well, I'm happy you're here tonight. I trust that you will walk away with some really good things to hold on to, and that you will feel more confident going into your home buying process. So quick market update. Since I'm in Orange County and I primarily marketed this specific seminar to people in Orange County, I've taken Orange County numbers. If you're outside of Orange County and you would like some numbers for your market, I'm totally happy to provide that for you as well, especially if you're in Silicon Valley, because I know that really well. But these are Orange County numbers. But what this does, it will give us a good snapshot of what the market looks like, Orange County and in California, and also across the country. California and especially my 2 markets are quite a bit different to the rest of the country market-wise. The trends that we see on the national level aren't always applicable in California. So that's one thing just to take with a grain of salt when you're reading articles or news and headlines about real estate. As you go throughout your day, it may not apply to where you're looking. So that's why it's important to have a real estate advisor that you can talk to about that. So you can kind of get what are the trends looking like in your specific market, because they are different. And for Orange County and Silicon Valley, they are very different in some ways and very similar in other ways as well. So, and strategy is different. That's one thing I've had to learn over the couple of years. Some of my Silicon Valley is a very competitive and aggressive market. Orange County is competitive, but it's not as aggressive. And as I've tried to apply some of my Silicon Valley strategies down here in Orange County, hasn't quite worked, hasn't quite translated. I've had to adapt. I definitely can apply some of them, and that's actually an advantage I have. Some of my Silicon Valley strategies have really worked, but some of them haven't, and I've had to adapt. So markets are very, very different. But having said that, I digress. Market update. So right now in Orange County, active homes are 4,397 homes. Sold in the month of April, since we're sitting here in the middle of May, 3,080 homes. So I want to pause right there. So let's say this month in May, another 3,000 homes are going to sell. If no more homes come to the market, that means there's enough inventory to satisfy the demand. There's demand for 3,000 homes, and there's 4,400 homes. So that would leave 1,400 homes. If no more houses come to the market going into June, there is no longer enough inventory to satisfy demand. There's only 1,400 active homes, and there would be another demand of 3,000. So that means we actually have a month and a half of inventory right now. Anything under 6 months of inventory is a seller's market. Anything above 6 months of inventory is a buyer's market. In my 13 years in the industry in California, we've never had more than 6 months of inventory. Inventory in California is the biggest problem with the real estate market. There just simply is not enough homes for sale to satisfy the need for homes, the demand. Even with rates being where they're at in a higher place now, even going through economic downturns, COVID, all sorts of things over the past years, the demand has always outweighed the supply. And that is the case here with a month and a half of inventory. Fortunately, we're seeing inventory turnover, so that we're never going to dry up. So it is, for the sake of the way the California market has been, it's a bit more of a balanced market. It's not a crazy seller's market like it was a few years ago, where homes were selling in a week on average. As you see the next line down, average days in the market is actually 27 days, almost a month on average for homes to sell in Orange County. That's because buyers have a little bit more option and a little less competition. The buying pool is shallower because of rates and affordability, but there still is not enough inventory to satisfy that demand. But it's a little bit more balanced. Average days in the market is 27. Median price of a condo or townhouse in Orange County. This includes the entire Orange County, which will range from, some areas that are less desirable to some areas that are more desirable. And the price ranges, will go from 600-700 all the way up to, I think there's like a price that's listed in Orange County for 150 million right now. So it's very broad, these numbers, and that's why it's important when you're doing your research and you're getting ready to shop for a home that you get this sort of data on the specific areas that you're looking. So that's one point right now. Write that down. That's a takeaway right now, is that when you're ready and when you're ready to be active, ask for these data points. Ask how many active homes there are. Ask how many homes sold last month. What's the average days on market? What's the median price? This will really help define expectations and really help you know what you're getting into and know what the landscape looks like. Is it going to be competitive? Do we have to be aggressive? Do we have a little bit more breathing room to really take our time here? And it's one thing to throw nebulous ideas out there and say, oh yeah, the market's great or this, but like looking at specific numbers like this backs whatever someone's saying. It's a great time to buy. It's a great time to sell, or we have to be aggressive. We don't have to be aggressive. It's competitive. All these things that someone might say about a real estate market. The numbers don't lie. The numbers don't lie. So 27 days, that feels like okay. You might be able to look at a house a couple of times before you have to put an offer in. But that's average. So there might be the really good ones, and we'll get to trends in a minute, that sell much quicker than that. So median price of a condo townhouse is 810,000, and the median price of a single family home is 1.4 million. Now interest rates today are between 6 and 7%, and obviously that is very dependent upon your financial profile, your credit score, etc., etc. And we'll get more into that in a little bit about qualification and for a loan. But rates today are 6 to 7%. And some of the trends that we're seeing. So like I said, it's still a seller's market, but it's a little bit more balanced. And what we're seeing with the inventory, and what I'm telling my sellers, if you want to sell your house, buyers right now, because they feel like they are kind of getting the short end of the stick with the rates, then they're paying more because of rates. They want a house that's done. They don't want to have to pay the 7% rate, the 1.4 median price for a house, and then still have to fix it up, right? It's not even just a want. It's like they can't, right? You put so much money into your down payment with that median house price point of 1.4 million. It's like it's pretty understandable that you might not have the extra cash to fix it up. So the houses that are selling fast are the ones that are prepared well and the ones that are priced right. So some sellers have not adjusted for a little bit more of a balanced market and are pricing too high. So for my buyers, what I tell them this presents is the houses that are prepared well and priced right are going to be competitive. So if that's what you want, you've got to come aggressive. There's a second way to look at it is there's going to be opportunities that are going to get overlooked. There's going to be houses that need some fixing up, but you might be able to find one that's just purely cosmetic and it's not that much, or you might find something that people have ruled out that you don't mind. And then there's going to be houses that are overpriced, and instead of saying, oh, that one's too expensive, you watch it. You kind of keep your eye on it, because at some point the seller is going to need to adjust. And that could be an opportunity to get an offer accepted under their list price, but you still have to be within reason of what the market's telling you. But there's definitely some opportunities out there for buyers, for those who are diligent and prudent at looking at the market and kind of seeing and go after those opportunities. And one thing we'll get into in a little bit is figuring out what sort of things other people might object to that you don't mind. Those are opportunities for you. Like, you may not need a garage, and there may be some random house that doesn't have a garage, and everyone's like, well, I need a garage. You're like, well, I actually don't need a garage. Everything else about the house is great. I don't need a garage. That's perfect for me. Boom, opportunity. Everyone else is ruled out for something, and you're going to take it. So some other trends that we are seeing prices still going up. Year over year, prices rose based off of the numbers last month, 9%. So 9% appreciation. California is an appreciation market. By that I mean it's a pretty sure bet homes are going to gain equity over time. But it comes back to that supply and demand. There's always going to be more demand than there is supply. You just can't build more houses in California. There is not enough space for it. And because of that, home prices will rise, barring some crazy like worldwide or national catastrophe or something like that, kind of like 2008 market crash. But the difference between now and then is mortgages are a lot more secure. Mortgages were propped up on built on sand back then, and it was just so insecure. Because of that, mortgages have become much more secure. So we'll never see it 2008 again. And we've rode COVID, we've rode a couple of different tumultuous presidencies. We're riding right now tariffs, and the market is still going strong, and we're still gaining equity. And so that tells me it's going to take something catastrophic really to change that in California. And we've had some pretty big things and it hasn't rocked it. COVID was nuts because we honestly thought, honestly, a little personal story. I came home one day because we got, you know, shelter in place and I couldn't go to work. And I don't work, I don't get paid. I'm on 100% commission. I'm not sure if you guys know that. Real estate is 100% commission. So if I don't go to work, I don't work with clients, I don't close houses, I don't get paid. And I was like, shoot, do I need to go like stock shelves at Safeway or something? Because like I'm not going to get paid here. Fortunately, 2 weeks in, we were deemed essential, real estate agents were. And I got to go back to work. And COVID, a crazy time, ended up being one of my best years ever. So you still know what like that was worldwide like pandemic catastrophic really like the market I remember crashed at the beginning of that, but that's rallied. And you know, the real estate market the stock market crashed, right? But the real estate market has just been strong. And so I really don't know what it would take to really alter things. We've had insurance issues. We had those big fires, the Palisade fires, and it's tricky to get insurance in California right now, but it's still going strong. People still buying. There's still transactions happening. So, having said all that, homes are appreciating 9% year over year. It's the rate of appreciation. Like I remember a few years back when things were nuts, especially when I was in Silicon Valley, homes were appreciating 9% in a week. So now it's 9% in a year. So it's the rate of appreciation which has changed. So you can obviously don't take financial advice from me because I'm not a financial advisor, and take it with a grain of salt. But it's a solid bet to think that what you buy as a house is going to appreciate, and you're going to gain some equity in it. It's just the question of how much equity. So I don't there's some people out there foreseeing that like okay, it's gonna turn, and there's some places in the country that have turned. There's places in the country that definitely buys markets, and it's prices are going down. But in California, I just don't see it. So that's the market update. Hopefully that's helpful. And as you can tell, I like talking about this sort of stuff. So if you ever want to chat about market updates, especially your specific markets, if there's specific neighborhoods that you're looking at, always happy to give you those numbers and chat about trends that I'm seeing in those markets. So without further ado, key number one is research. So the first step of buying a house is you got to do your research. You can't go out there and wing it. You can't go out there and just figure it out as you. Well, you can. You can go out there and figure it out as you go. However, you'll be much more prepared and you'll find success quicker if you do your research before you do it. And this is what neighborhoods do you like. This is what do you want in a house? What don't you want? What are your expectations? What are your long-term goals? Like, are you going to buy a condo and then in 3 years you're going to sell it and buy a single townhouse, and in 3 years sell it and buy a single-family home? Do you want a house hack? Do you want to buy a duplex, live in one and rent out the other? Do you want one with an ADU? Like all these sort of things that could be a good strategy for you. Research them. Figure out what you want, and then figure out what is on your list of needs in a house. Really refine. Before you even go out and look for a house, you want to make sure that you're looking at the right houses. Because it is competitive, you have to move fast. So you really have to know what you want in a house before you go out there. And that's what this research does. So I always coach my clients to go by the 10-5-3 rule. So write down 10 things you want in a house. Okay? I want it to be 4 bedrooms. I want a garage. I want hardwood floors. I want a big backyard. I want a pool. Whatever the wants are. Okay? And then cross off 5 of them, narrow it down to 5 needs. I need 5 bedrooms. I got 10 kids. They each need whatever. This is a need. I need to be in a gated community. Okay, if that's a need. I need a garage. I need it to be renovated. Whatever those needs are. Then cross off 2 of those and narrow it down to 3 must-haves, non-negotiables. Like there's no way you would buy a house if you didn't get these three things. What this really does is it refines and focuses your search. And if you focus on a little, you'll end up getting more. If you focus on the 10, you'll end up like settling and feeling like you're not getting what you want, or you'll end up with nothing, if I'm honest, if you're trying to get 10 things on your list, right? But if you aim for the 3 and you get 3, I'm pretty sure you're going to get more than that. So it's all about focus and refinement. And when you're looking at houses, you can always come back, but like I said, you have to move fast, so you don't want to waste your time looking at houses that really don't fit your needs. If you've been looking for a while and you really haven't found anything, like the inventory is out there, they're just like, it's not great, then sure, open up your horizons. Maybe it's time to adjust your list. But when you're starting out, you got to be refined, you got to be focused, and so that you can move quick if you find the property that you're looking for. And then secondly, so that's a 10-5-3 rule. And secondly, create a don't needs list. So often we write the things we do need. Write a list of the things you don't need. And I mentioned this before. Your don't needs can be an opportunity. If you don't need, hardwood floors, you're happy to have tile, or you're happy to have carpet, right? There's people out there who have to have hardwood floors. Like, that could be an opportunity, because floors are a huge undertaking to replace. Say you come across a property that is all tiles, and someone's like, I really need hardwood floors, and ask how much that's going to cost to replace all that, and I'm not going to be able to move in because I can't move in before they do that. No, I don't want that house. But then along comes you, and you're like, great, I don't need hardwood floors. This house is perfect. It's got the pool I want. It's got the garage. It's in a good community. It's got my 3 things I need. It's got the 4-bedroom, whatever your 3 things are. And it's like, well, I don't need hardwood floors. I'm happy with this tile. Perfect. Boom. Opportunity for you, right? And if you want to get creative, think about things that people might object to, like weird things. And like, yeah, well, I'm okay not having a garage, right? That's a kind of an odd thing, especially most houses in California have garages, even though no one uses them. I park both my cars on the driveway. The garage is my gym and my kids' storage for all their stuff. But it's pretty common. But like I said, you may come across a house that doesn't have a garage, and that's an opportunity if you don't need it. So think outside the box and create a don't needs list. That can definitely help find opportunities for you as you go through. So that's research. Really refining, figuring out where you want to live, what you need in a house. And I recommend doing that before you go to look. You could go out and look at houses to help you inform that list, right? But don't go actively looking ready to write offers before you've got a clear idea of what you want in a house. So that's key number 1, research. Key number 2, pre-approval. Now, before you even go look at houses actively, you have to be pre-approved for a loan. There's 2 main reasons for this. One, because the market is really competitive, if you find a house that you really, really like, you got to move fast. You may have to put an offer within a day or 2 on that property. If you don't have a pre-approval on hand, you may miss out on that property. It could delay you putting an offer in, and the property could, get swooped up from underneath you. Someone else might put an offer in. You cannot submit an offer without a pre-approval. It's part of the contract, and it will be required by 99.9% of sellers before you put in an offer. They're all part of your offer package. They want confirmation of that you are pre-approved for the loan amount that you're offering for the house. So that's the first reason. You can't even write an offer without pre-approval. Second reason is it really solidifies your budget. So you probably have an idea of what your budget is. You're saying, okay, I've got X amount of down payment. That's 10 or 20% of this amount. I could plug it into a mortgage calculator online and say, okay, that's at a 6% rate. That's a monthly mortgage of X amount. Yeah, I could afford that. So my budget is this. Okay, there's enough tools out there on the online that you can figure that out. Give you a general idea. However, you're not running your credit. You don't know what loan programs there are. You're not really assessing your debt to income ratio, which is huge in getting pre-approved for a loan. So you could be actually setting yourself up with the wrong unrealistic expectations. And if you've got, say, a budget of 1.2 in mind, and you go out and look at $1.2 million houses, and you find one, you fall in love with it. You're like, I have to have this house. Oh crap! I gotta get my pre-approval. Let me call my lender, and they're like, sorry, you're only pre-approved for 1.1. Now you just got your hopes up. One, on a house, and two, you just wasted your time looking at a house that you weren't even pre-approved for, right? So why cause yourself that heartache and why waste your time? Get pre-approved, and I can be a resource for you if you need a lender. I've got contacts at different banks. I've got private lender contacts. I'm happy to give you referrals. I recommend talking to 2 or 3 different lenders to see what loan programs they have. Different banks, different lenders have different programs. So highly recommend talking to a few different people. Oftentimes, going with the bank that you bank with. Say you bank with Chase, going with Chase Mortgage is a good way because they offer incentives and loyalty incentives. And what I'm finding right now, the big banks kind of have some of the best programs. The more private lending is good. They're pretty soft. They're good for like straightforward. Funny to say, I was gonna say they're good for straightforward or unique outside the box. Chase is good. They've got lots of different diverse amount of programs that fit their clients really well. Private lending will find a little bit more unique situations or a slam dunk, like no problem. Sort of thing like, oh yeah, this person's only needs a small little loan, DTI is fine, that sort of thing. But I recommend talking to one private lender, at least one big bank, and then maybe one more for a third opinion. You get pre-approval on those. They will run a soft credit check for pre-approval. It shouldn't impact your credit much at all. Again, don't hold me to that. I'm not a financial advisor. But getting that pre-approval is essential before you go look at homes. So key number 1, research. Key number 2, pre-approval. Get that pre-approval in hand. On part of the offer package, when you write an offer, good lenders and good realtors will make sure the lender will get you a property-specific pre-approval letter with this specific amount. Say you're pre-approved for 1.2, but you're only offering 1.1. You don't want your pre-approval letter to say 1.2. You'll get one that says 1.1. You don't want to reveal all your cards to the seller. So make sure you find a good lender and a good realtor to work with, which is key number 3. Assemble your team. You can go out and look at houses on your own. That's totally fine. Open houses are good. But I recommend doing it with a realtor. I'm a little bit biased. Private showings are much more effective. Realtors are a resource, a wealth of knowledge for you. They can advocate for you as well. And when you're ready to write an offer, you need them to help you write an offer. So even before you go look at houses, I definitely recommend finding a realtor to partner with and a lender to partner with as well. A lender can give you daily insights into the way the market is, what your pre-approval is looking like. You can call them on a specific house and like, what do the numbers look like on this house if I offered this amount? And then, like I said, a realtor will give you market knowledge, they'll give you neighborhood knowledge, they'll be able to get you into houses, and they'll be able to help you write an offer. And with things moving fast on certain houses, you need to have your team assembled before you go look at a house, before you actively go look at houses. And by active, I mean you're looking at a house and you could possibly put an offer in, right? So you actively look and write in offers. So assemble your team. Now, if you are in Orange County or Silicon Valley, I would love to work with you. You may know someone, you may know a family member, friend already. If you prefer to work with them, no pressure. This is not a sales pitch. This is an educational thing. However, my job is to help people. And if you need help, I'd love to help you. And I'd love to be part of your team. So at the end of this seminar, you will have all my contact info. And when you're ready, I'd love to at least have a conversation with you to learn more about your situation and see if it would be a good fit for us to work together. So that when it's time to go look at houses, I can be part of your team and I can refer you to some lenders, lender partners, and together we can all go out and find you a great house and have great success with your real estate journey. But like I said, if there's someone else you want to work with, that's totally fine. But would love to have your business if you're up for it. So that is my mini little pitch. Key number 3: assemble your team before you go look at houses. Do you think there would be 3 keys before you even get to go look at houses, huh? Well, key number 4 is tour properties. The moment you've been waiting for. Touring properties should be fun. It should be fun to go look at houses. I recommend going into looking at houses with an open mind, but focused. Like you've got your 3 must-haves. You know what you really want. You're not frittering around in neighborhoods that you really know you're not going to be buying because that's just wasting everyone's time. But you're focused. You're looking at houses that fit your criteria, fit your budget, that you know of your pre-approval. And it should be fun because that means every house you look at, it could be your house, which is pretty exciting. But the reality is you're probably going to look at multiple houses, so most are not going to be your house. And you may even find one that you love and put an offer in, you may not get it, and that's part of the journey. But you never know when you're going to be stepping into your house, which is pretty crazy. When I bought my house, I remember touring it with my family and didn't think it would be my house, and now I've been living here for 3 years, and I'm sitting in my house right now. I'm like, yeah, I remember that day walking through it. I didn't know that this would be my home, right? It starts as a house and becomes your home, and that's the fun part of this journey. So, 2 main ways to tour properties. There is open houses. It's a good, quick, efficient way to see houses. Because they're open. They're usually open 1 to 4, Saturday and Sunday. If there's a bunch in the neighborhood you want to see, you can go bang, 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 see them all. You don't have to worry about making appointments, in and out. No problem. You can also go see them without your realtor if they happen to not be available. So it's convenient that way. And then the second way to see houses is private showings. These are my favorite because I get to take my clients through the house, just them, no one else. It's the house all to themselves. You can speak candidly. You're not going to feel pressured by an open house host telling you to sign in or asking you about your business. You can just really soak in the house, take your time. You can also walk in and immediately be like, nah, not for us, and then walk out. Sometimes if you do that in open house, it's kind of awkward, right? So you get both worlds where you can spend as much time within your appointment time to do that. And to get private showings, you do have to work with your realtor. They'll set a showing for you, and the way I work with my clients, I kind of learn how long they need in a house. First few times going out, I'm like, oh, they're pretty quick walkthroughs. They're only like 10, 15 minutes, or like, okay, they like to take their time, 30 minutes, and or if I find one, I'm like, I think this might be the one. I can set the appointment for an hour, and just, we can spend as much time in the house. And that's something as a realtor we can do. We can set those private showings with the listing agent and get us into the house pretty much whenever. And that's the other thing about private showings. Open houses, you're limited to the 1 to 4 window, right? What if you want to see the house at sunset? What if you want to see it when it's dark? What if you want to see it any time, basically, if it's okay with the seller? Obviously you're not like requesting to see a house at 3 a.m. that's occupied, but if it's vacant and there's a compelling reason to see a house at 3 a.m., you technically could. Now, if I'm your realtor, you're going to have to really have a compelling reason to see a house at 3 a.m. That's probably a bad example, but like any evening time, dinner time, when families might be home, you could come see the house if it's vacant, or you can make an appointment. So private showings offer a lot of flexibility with seeing properties. And one thing I've got to mention about realtors too, like why it's really important to work with a realtor. Sometimes there'll be opportunities for off-market showings. When I'm out and about, a big part of my business is networking with other real estate agents and find out what they've got going. I have a colleague who's got this off-market house. I'm like, oh, that'd be great for my clients who are looking in the area. Hey, can we get in there? I'm like, sure, we'll get you in there for a private showing. So some off-market tours, off-market properties, those are kind of gold. So whenever you hear of an off-market property opportunity to go see an off-market, jump on it, go for it. Always recommend that for my clients. You never know, you might find a great opportunity. So that's key number 4, touring properties. Key number 5 is writing an offer. Now, Now, you've toured some properties, you found, if I write a winning offer, I got to get that right because that is definitely important. You've toured properties, you found the house that you want to write an offer on. Fantastic. There's work to do. You've got to put together your offer package. You've got to do some market research to figure out how much you want to offer. You've got to find out the seller's expectations. That sounds overwhelming, right? Well, good news is your realtor, if they're a good realtor, will do a lot of that work for you. So you tell me, hey, this is a house I want to write an offer on. Great. Let me do some research. Let me talk to the listing agent for you. I'll get back to you. I'll call the listing agent. Hey, you expect any offers? Do you have any in hand? What are sellers' expectations? Do they need a rent back? Do they need this? What's this? That. Find out as much information as I can so that we can bring a competitive offer, one that is suitable to the sellers and favorable to the sellers and also aligns with where you guys are at. I'll also do a market analysis, a comparative market analysis, where I'll find most recent solds in the area and kind of see what those houses are trading for, live data, and present that to you and say, hey, here's what the sales expectations are. They're listed at this price. I see these houses sold at these prices. I think their list price is pretty reasonable. You even have this one house that sold a little bit more. So you can feel confident going over if you wanted for appraisal, because appraisers use comparable homes in making sure that the house appraises for the right price, and we'll get to that detail soon. But basically, it's market and a market analysis for you, so you can choose the right price. I'm never going to tell you what price to offer in a house. I'm not going to say, yep, you got to offer 1.5. I may suggest, hey, if you want to win this, 1.5 sounds like it's going to be the number. But especially on the initial offer, it's going to be like, here's what the numbers say. 1.5 is supported by this data. I think that's a good number. I'd say the value range for this house 1.5 to 1.6. If you're in that range, you can feel confident that you're getting good value for the house. You can feel confident that it's going to appraise. And based on what I heard from the listing agent, in that range is what the seller's expecting. So you could reasonably expect that the seller would accept or at very least entertain the offer. So that's seller insight, market insight, and then we'll discuss terms of the offer. What sort of contingencies do you want? What sort of inspections are you wanting to do on the house? Timelines, how quick can we close? That's a conversation with your lender. So I'll call your lender as well. We'll contact lender and say, hey, we're preparing to write an offer on this property. One, can you get a pre-approval letter for this property with the address on it and the price we're offering? And then how quick can you close based on the numbers that we're thinking? And then we'll compile your offer package. So the offer package will include the RPA, which is the Residential Purchase Agreement, and this will outline all those details. The price you're offering, the terms, the contingency terms, the close of escrow timeline, what's included, what's not included, who pays what closing costs. Some of those things are standard, some of those things are commonly negotiable. Everything in real estate is negotiable. There's some things that are just like, this is kind of how it is. Even if you want to negotiate, that's fine. That might piss off the seller. So there's certain things within the contract that we outline. Also included in your offer package is going to be your pre-approval letter from your lender with the address on it and the specific price. And then third is your proof of funds. So whatever down payment, say you're doing 20% down payment on $1 million house, that's $200,000. You have to show a bank account that has $200,000 in it. This is per the contract. So you have to, it's required to show proof of funds. This is included in your offer package. Some other situations will include specific terms like a rent back. If the seller's staying in possession for 10 days afterwards, that can be included in that. Sometimes, especially in Silicon Valley, if disclosures are provided up front, this is not so much in Orange County, signed disclosures, acknowledgement that you received them, and then not so much these days because technically I'm not supposed to do it, but in certain situations I go for it, a cover letter, like a letter to the seller, telling them how much you love their lemon tree in the backyard, etc., etc. Technically not supposed to do them but no one's really enforcing that, and sometimes it's good to do so. So that's kind of what goes into an offer. That's like your offer package. A win and offer, the price is the biggest term. Obviously, that's the first thing sales are going to look, and they're going to look at their bottom number. But there's other things that can sweeten the deal: shortened contingencies, quick close, or a longer close. They may want a longer close, rent back, paying for closing costs, a lower buyer's agent commission. That's something that we won't get into the weeds with on this. Maybe if someone asks a question at the end, we can talk a little bit about that. But sellers are no longer required to pay buyer's agent commission. For the longest time, it was basically like 3% goes to the seller's agent, 3% goes to the buyer's agent, and seller pays all of it, the full 6%. Now, that's negotiable. That was kind of like industry standards. It was always negotiable. It was just like, this is how it is. Seller, you don't have a choice. Okay. Now a seller has a choice. They have agreement with their listing agent that how much they're paying them. And then part of your offer includes how much commission the buyer's agent is requesting. And in 9 times out of 10 right now, it's requesting it from the seller. I've had a single buyer that's paid me commission. All sellers are still agreeing to pay commission. It's in their best interest to pay it. The difference is it's now negotiable and it's part of the contract. So in some situations, you might be asking for, a buyer's agent may be asking, I can't mention specific numbers here, X amount, right? But to make your offer a little bit more competitive, I'll reduce that by 0.5% or 1%, so that now the seller's bottom line is less, right? So it's a way to make the offer a little bit more competitive, and the same goes with your terms. It's a way to make your offer more competitive. The more down payment you have, the stronger your offer is, the less chance it falls through because you're more qualified. The shorter contingencies you have, the less contingencies you have. These are all different things that can impact your offer and can go into winning an offer. That's why it's not just, let's write an offer. There has to be a good strategic conversation with your realtor at this point. And it's based off of your profile, it's based off of seller's expectations, it's based off of competitiveness. If it's not competitive, no other offers are coming in, and it's in your best interest to make it as loose as possible, as in like give yourself as much time in the contingencies. Give yourself a close that fits what you want. If you want a 30-day close, take it. Don't give them a 21-day close. But if it's competitive, you got to make it as tight as possible. If they want a 21-day close, you put pressure on your lender to put a 21-day close. If they want short contingencies, you do that. Closing costs paid by you do that, right? So everything's negotiable. It's very moving target like, but that's why high communication during this time is very, very key. So that is an offer. So what's next? Okay, escrow. So you write an offer, you submit your offer to the listing agent, to the seller. If there's no other offers on the table, they may accept, they may negotiate, they may reject. At very least, they're going to negotiate in most cases. They'll reject if it's just a crazy lowball offer. All right. So you could expect some negotiations back and forth. That could be on price, could be on terms, and you kind of go until you find an agreement. If there's multiple offers, if there's one outlier offer, say most everyone offered a 1.5 and someone offered 1.8, like, well, yeah, I'm going to take that one. Let me stupid if I don't, right? But if they're all pretty close, they'll send like a multiple counter offer, which is usually kind of a best and final. So you prove your offer and then they take the best one. And so usually in most cases, unless there's a big outlier, you'll have an opportunity to kind of adjust your offer if it's competitive. And that's kind of carried out with high communication. That's why from the very beginning, I'm talking to the listing agent to build rapport with the listing agent. Because not only is it terms and numbers on paper, but it's also confidence in getting the deal done. So if you're professional, if I'm presenting a professional, proactive, assertive aura to the listing agent, they're going to back my offer when they're talking to the seller, because they're like, This one, I barely heard from this. Yeah, they're a little bit higher on paper, but I just don't know if they'll close the deal. The transaction may fall through. But this one, this guy's called me 10 times, almost bugging me, but I love his persistence. I'm confident they can close the deal, right? So that's kind of what will happen there with some negotiations. There'll be some back and forth negotiations in most situations, especially in if there's multiple offers. So it takes time. It takes a few days to kind of go through the process before you might have your offer accepted. In great circumstances, I've had this before. I've had offers accepted on the day off, and it's usually there's some verbal negotiation happening before that. It's not highly competitive, or it's something that needs to move fast. Um, so with a win and offer, you just got to operate within what you're comfortable with and make it as tight as possible. That's what a win and offer is. If you put your very best foot forward, and it's tight offer, you're comfortable, and it doesn't get accepted, it's just not meant to be, and that's okay. But if you're not putting your best foot forward or writing the best offers, if there's mistakes in your offer in the contract, then you could be missing out on some great properties when maybe you could have got them. So that's win and offer. So you found a great house, you wrote an offer, you've done a little negotiation with the seller, and they accept your offer. Fantastic. You get a house. Here's the keys. Right? No. Key number 6, escrow. So as soon as you have an offer accepted, the day of or the next day, depending on the time, and escrow will be opened. Escrow is a third-party company that facilitates the transaction. All documents or monies are sent to them. They hold them. They ensure that all parties are performing and that there's no funny business. So escrow is great. There is fees for escrow. It's non-negotiable. You have to pay. You have to use escrow for transactions with a realtor. Outside of a realtor, let's not go there. You have to use escrow. It's in your best interest to use escrow. That's an escrow company. Escrow is also a term for the time that between accepting an offer and closing escrow, getting keys. So it's an escrow period. During this time, you have your due diligence. If you've got contingencies, like you may have an inspection contingency, which is an opportunity for you to perform inspections, to visually inspect yourself, to walk the property, to perform a home inspection, a termite inspection, roof inspection, sewer inspection. Get as much information on the condition of the home as possible. It's an opportunity to review your disclosures that the seller has to provide you. Sellers are required by law, by the contract, to provide you with certain disclosures, and it outlines any material fact that they know about the property. And during this period, if you have a contingency in place, if anything arises that you are no longer comfortable moving forward with the transaction because of that material fact or that finding, you are able to back out that transaction with no fault if you have a contingency in place that backs that. What's on the line, if you don't have a contingency in place, is your deposit. So as soon as the escrow is open, you're required by the contract to deposit your earnest money deposit, which is usually 3% of the purchase price, into escrow, and that's held in escrow for liquidated damages. It contributes to your down payment at the end of the transaction. So say your down payment is 10%, you'd only have to bring 7% at the end of, at the closing table. So it contributes to your bottom line, but it's held in escrow. So if you back out, if you don't have an inspection contingency, and you walk the property and you find mold, and you're like, I don't want to buy this house anymore, and you back out, the seller is entitled to that 3% deposit. It doesn't go straight to them, but they are entitled to that for damages. Because you backed out, you do not perform on the contract, and you do not have a contingency to back out. I just realized I misspelled contingencies here. Don't tell anyone. So that's why we have contingencies, because it protects buyers, protects the transaction. So during that due diligence period, it's really important to be thorough, because once you remove that contingency, if you find something, you're kind of screwed. If it's something major, then it may be worth losing your deposit over. Or if the seller provides a new material fact, you actually get a 3-day contingency. automatically based on that. So if you remove your contingencies and then the seller's like, oh, by the way, we had a leak 12 years ago. I forgot to mention it. You're like, whoa, whoa, whoa. Okay. Now I get 3 days to do due diligence on that leak to make sure there's no mold or there's nothing left on there, right? If you find something, you are eligible to back out. So that's due diligence. We recommend home inspection, pest inspection, roof inspection in both of my markets, and in Orange County, sewer inspection. If there's chimney inspection is often wise, fireplace inspection. All in all, these inspections could cost up to $1,000 or so for all of those. But trust me, it is worth it because you want to find it before you own the house, just in case it's something that stops you from wanting to own the house. You don't want to find it after you close because it's your problem, and or to get the seller to make it the seller's problem, you got to go through mediation and arbitration, and that's just a mess, legal stuff. And so you want to find as much about property as possible before you close so that you can know exactly what you're getting. And that's that due diligence period and contingency period. Two other contingencies, the appraisal contingency. So during this escrow period, the bank will order an appraisal. Appraiser will come out. They're a third party. They represent the bank. They will appraise the property. They'll provide comps, and they'll say, okay, you offered 1.5. I see these comps. The data backs 1.5. It appraises. Or they may be like, it appraises for more, 1.6. Great, you got a deal, instant equity. Or worst case scenario, they'll be like, no, you offered $100,000 too much. It's only worth 1.4. Now there's a $100,000 delta. If you don't have an extra $100,000 in cash, the bank will only loan on $1.4 million value. So that you would have to come up with that difference in cash. If you don't have $100,000 in cash, or you don't want to move forward now because it's not worth that much, if you have your appraisal contingency in place, you can back out. If you don't have your appraisal contingency in place, you kind of have to continue on, and you can't back out based on that. You have to find the difference or eat your deposit. In Silicon Valley, it's very common not to have an appraisal contingency. It's actually common to not have any contingencies. We won't get into weeds with that. There's strategies for that. This is a way to make your offer more competitive. If you really need to be, there are strategies. But in all cases, I will never ever recommend my clients to not have an appraisal contingency if I have not provided them data that backs up the price they're offering. If they're offering 1.7 and all the data shows 1.5, and I provide my clients with a CMA, I'm not going to tell them to waive the appraisal contingency. I'm like, you're crazy, you can't waive that. So it's waiving contingencies is risky, but it can be a calculated risk if necessary. But you have to have the right strategy, and it has to be, you got to do it with wisdom and guidance from your team. The third contingency is your loan contingency. So you get your loan pre-approval, and that basically says, yeah, based on what you've told us, you're approved for a loan. But once you get in contract, the bank has to fully process your loan. And so you go through the full loan approval process. If for whatever reason something happens, something's found, and you don't qualify for that loan, they say, no, sorry, actually, we can't approve this loan. Your loan contingency allows you to back out without losing your deposit. So at some point in escrow, during this escrow period, bank's going to ask you for a lot of things. Bank statements, this, that, lots of different things. It's in your best interest to be prudent and to be fast and efficient with those things, because the quicker you get them back to them, the quicker they can get your loan approved. And then once the loan approved, you can remove your loan contingency, and then you get cleared to close, and you close escrow. So during the escrow period, you do your due diligence, you get appraisal, your loan gets processed and fully approved, and then you get cleared to close, and that means you can, key number 7, close escrow. Clear to close are the best 3 words in real estate. Well, some of the best 3 words, because it means the job is done. That means you're so close to owning your house. That means the loan's been approved, appraised, you've removed all your contingencies because you feel great about a house. You may have found a couple of things that need some repairs, but that's normal. Don't have to worry about that. Or, oh, let me go back real quick. This is a big difference between Orange County and Silicon Valley. I almost forgot this. During the escrow period, after you do your due diligence and you do your inspections, you can renegotiate with the seller. You can say, hey, we found this problem with the house. We got an estimate and it's $10,000. We want a $10,000 credit from the seller. We want to reduce the purchase price by $10,000. Whatever it is, you can go back and negotiate. You can also request for repairs. You can request that the seller actually repairs it before you move in. You can find that the dishwasher doesn't work, right? Like, I don't want to move into a house that doesn't have a dishwasher, and I don't want to have to deal with getting a new dishwasher. That's included in the sale. So seller, I'm requesting that you put in a new dishwasher before moving. So that's up to the seller. It's, again, negotiations. You find the happy medium, the win-win for everyone. In Orange County, it's very common to do this, to request for repairs or get a credit from the seller based on your findings with inspections. So going back to the close of escrow, all of the any requests for repairs have been completed. The contingencies are removed. The loan's fully approved. You get clear to close. You go down to the escrow company, or that more often than not, they will send a mobile notary to wherever you are. You sign your loan documents. They will have to be in ink, lots and lots of signatures. You wire the remaining balance of your down payment. So say your down payment was 20%. You've already wired 3% for your deposit. So you're going to wire 17% of the purchase price to escrow. Bank will wire the 80%, whatever the loan is, to escrow. Once escrow has received all funds from the bank and from the buyer, and all documents have been signed, they will release the title to the county to record in your name. New owner, new buyer 1, new buyer 2. House will be recorded in your name, and we will get the official confirmation of closed on record. And you will officially be the owner of the new house. After all that process, this typically takes 20 to 30 days, the escrow period. So from getting your offer accepted to close escrow is about 30 days. It's pretty dang quick, considering, hey, you might have only just saw the house 32 days before closing the escrow, right? So it can happen pretty quick. So also during that time of that escrow period, right, you're coordinating movers, you're transferring utilities so that you'll have gas, electric, and water when you move in. You're not buying a new car. You're not buying huge purchases because that could affect your loan. Wait on those. Always check any purchases during escrow with your lender before you buy them. Big charges. So there's lots of moving parts, but movers, utilities, I can be a resource for you for that. I've got movers, I've got utilities. You may, part of your due diligence, you find that you need to do some repairs. You need to get those repair people lined up, right? You want to paint before you move in. Get those people lined up, get those estimates, get them lined up. So when you close escrow, you can get those people coming in, getting your house all good to go, ready for you to move in. If it doesn't need any work, you can literally have the moving truck arrive on your close of escrow day. You get possession at 5 p.m. on that day. Say you close on a Thursday at 5 p.m. that day, your moving truck could back up, boom. You could sleep there that night if you want. Close escrow. So that key number 8 is take ownership of the house. Get the keys. You can do whatever you want. It's your house now. Your house. It also means you got to pay the mortgage. It also means you got to pay for the fixes. But you own your house. That's so fantastic. What a journey it's been. Take those keys. Take ownership. One caveat is if there is a rent back. Seller may be staying in the house for 10 days. You do not have access to that house. It's your house, but they are staying in their house. Rent backs sometimes are free, sometimes they're charged. Sometimes there's a deposit held in escrow for damages. That's all done with the appropriate documents, with the proper forms within the contract. So your ownership, you take ownership, but you may not take possession for X amount of days. But you own the house. Congratulations. Take ownership of that house. Start mowing the lawn. Start making it your home. Like I said, you walked through that house 35 days before this day and not knowing it was going to be your house, not knowing it was going to be a home. And you take your first steps into that house as your home. It's pretty awesome, pretty proud experience. So congratulations. What a journey. So that's the keys to buying a home. I hope that was helpful for you. So there's a lot of information there. I wasn't able to cover everything probably. I don't have notes with me here because this is something I do this every week. I have buyers consults where I sit down and I talk about this with people. I do seminars like this often, and I find it much better that if I just talk off the cuff rather than follow notes and So I may have missed a couple of things, and there's so much that go into buying a house, as you could probably tell, for all this information. But my goal for tonight was that you would leave educated, informed, and feeling more confident about your home buying journey. Whenever you're ready, whether it's now or in 2 months, 2 years, that you feel set up to succeed in your home buying goals. So if that's the case, I really appreciate that you give me a thumbs up in the chat. And also, just like I said earlier, if you are looking for someone to work with, I would love the opportunity to work for you. Would love the opportunity to be your guide through the process. Here's my information. For 2 reasons. One, to continue to be a resource for you. If you've got further questions, if you need advice, if you want to discuss the market in a specific neighborhood, call me, text me anytime, email me. This is my personal direct number. This is the number my wife texts me at, 408-784-0378. For those of you wondering, it's a 408 area code, which is San Jose, Silicon Valley. That's where I'm from. I'm actually originally from England. Not sure if you picked up on my accent, but I've lived here 30 years now, so definitely got a hybrid accent. American or Californiaized, let's say that, not Americanized, Californiaized. I am a citizen, but my 408 number is for San Jose. So if any Silicon Valley people here, I'm happy to chat with you as well, happy to help you. But feel free to reach out to me anytime if you need help, or anyone that you know needs help, whether they're buying, selling, or investing in real estate. Like I said, I service all aspects of residential real estate, and happy to help any time. So feel free to call or text or email me anytime. I hope this is educational for you. We'll end with Q&A in 1 second. I'm going to just scroll through some of the questions here on the chat. But if you have a question, also you want to ask it live, you can feel free to raise your hand. If you need to go, this could be a good time for you to leave. But please don't hesitate to reach out to me anytime if you need anything real estate related.